I'm the Tax Geek, and I'm back with more of your taxes oversimplified. In this video, we're going to take our first look at the Affordable Care Act, specifically the Premium Tax Credit. The Premium Tax Credit is a refundable tax credit that you qualify for if you purchase health insurance through the federal or a state marketplace and your income falls within certain guidelines. You can purchase health insurance, pay the full premium, and claim the entire credit when you file your tax return, but most people elect to have an estimate of the credit advanced to them each month to offset their health insurance premiums. You are eligible for a premium tax credit as long as you have no access to affordable health insurance either through the government or an employer. When you sign up for health insurance through the marketplace, you will answer a number of questions about your household size and income. Based on your answers, you may be eligible for an advanced premium tax credit, which can be used to reduce the premium on whatever health insurance plan you select. When you apply for coverage, your advanced premium tax credit is determined using the income you estimated. When you file your tax return for that year, your premium tax credit is calculated based on your actual income. If the premium tax credit calculated on your tax return exceeds what you were advanced, you will receive the difference as a refundable tax credit. If the premium tax credit is less than what you were advanced, you will have to repay some or all of the excess in the form of an additional tax. To see how it works, let's follow Richard as he purchases health insurance through the federal marketplace. To apply for coverage and an advance credit, Richard visits healthcare.gov and answers several questions about himself and his family size, and provides an estimate of the income he expects to make in the next year. In this case, Richard lives in Georgia, is male, age 33, and a non-tobacco user. He works for a small company which does not offer affordable health insurance to its employees. His annual salary is $37,000, and he doesn't expect to have any other income in the upcoming year. As a result, the marketplace estimates Richard would be eligible for a premium tax credit of $214 a month, which he can use to reduce the monthly cost of whatever health insurance plan he selects. This is the plan Richard ultimately selected. Now let's calculate Richard's actual premium tax credit at the end of the year. In January, Richard received this Form 1095-A from his health insurance provider. This form shows the full premium for the insurance he purchased, the premium tax credit he was advanced, and the premium for the second lowest cost silver plan that was available to him. The credit itself is calculated using this Form 8962. It turns out Richard's company did very well last year and, in addition to his salary, gave him a $5,000 bonus. He had no additional income. On line 1 of the form, Richard enters his tax family size, which would include Richard and his spouse and dependents. Since Richard is single with no dependents, he puts 1 here. On lines 2A and 2B, Richard enters his modified adjusted gross income. If Richard were married, his spouse's income would be included in this amount. If Richard had dependents and they were required to file tax returns, their incomes would be listed here as well. Since Richard's only income is his wages, and he is making no adjustments to that income, his adjusted gross income of $42,000 is entered here and totaled on line 3. On line 4, Richard enters the federal poverty line for his location and family size. Since Richard lives in the 48 contiguous states, that amount is $12,760, which he found using this table from the form's instructions. He divides his adjusted gross income by this amount and puts the percentage, which in this case is 329%, on line 5. Using that percentage, Richard finds his applicable figure, again using a table from the form's instructions. This applicable figure is 0.0673, and he enters this figure on line 6. In other words, for someone with Richard's income, a health insurance premium of less than 6.3% of his income is considered affordable. Richard then multiplies this applicable figure by his adjusted gross income to get his annual contribution amount, and divides that figure by 12 to get his monthly contribution amount. These figures are entered on line 8. Luckily, Richard had the same premium, second lowest silver plan cost, and advanced premium tax credit for each month of the year. Therefore, he can enter the annual totals on line 11. He then subtracts his annual contribution amount from the premium of the second lowest cost silver plan to arrive at his annual maximum premium assistance. This amount, or the total of his annual premiums if they were lower, is his premium tax credit, which in this case is $1,768. This amount is then compared to the advance premium tax credit he received, which was $2,568. Since he was advanced more than he was actually entitled to, he must repay the difference as an additional tax. There are repayment limitations in place if Richard seriously underestimated his income when he applied for the credit. These limitations are based on his filing status and percentage of income over the federal poverty line and are shown on this chart from the form's instructions. Richard's repayment is limited to $1,350, but since his $800 repayment amount is less, that's what he will repay. This repayment is shown on line 2 of Schedule 2 and carried to line 17 of Richard's Form 1040. If, say, Richard's income had been only $32,000, his actual premium tax credit would have been $3,301. I'm not going to go through all the calculations, but they are shown on the screen. In this case, the actual credit is more than what he was advanced, and the difference would be shown as a refundable credit on line 9 of Schedule 3 and then carried to line 31 of Form 1040. The premium tax credit is one of the more difficult tax credits to calculate and explain, and there are, as usual, many more details than I can cover in this short video. Additional resources and information can be found in the links in the video description. If you found this video informative, please give it a thumbs up and subscribe for more content. Please share this video with anyone who would find it useful. You can direct any questions, comments, or suggestions to the comment space below, or you can email me at taxesoversimplified@gmail.com or follow me on Twitter at TaxGeekUSA. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.